Good morning, traders from Chicago. It's 8 a.m. Chicago time on Monday, the 6th of November, 2017. It's nice to be back in the hot seat this morning. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The leader this morning, of course, is crude oil. Crude oil's up at 55.91 currently on the December contract, up 26 cents or 0.47%, almost half a percent up. Crude is hovering right on top of the a key high volume node and balance area set from way back in March, and we're just sitting here back in balance. And crude, I'm sure most of you probably heard that over the weekend, 11 Saudi princes were arrested by a new task force which was created to fight corruption. And one of those that was arrested is Prince Al Walid bin Talal, who is the huge investor in Twitter and Apple and so on, Yahoo and other companies, other U.S. companies. One of the wealthiest men in the world. So that caused a spike in crude from 54.40 to 55.76, and then that continued on the market reopen to 56.28. Some interesting stuff going on over the weekend. On top of that, we have the head of the New York Fed deciding to leave early. His tenure continues until January 2019, but he's likely to announce that he will be retiring before that time comes. Interesting timing on that. Other than that, there's really not much else I can say. The market is allocating all over the place. I see both indices and the treasuries are up, currencies are up. The Eurobond is trading up 0.28% or 44 ticks. The treasury, the U.S. bond, is up 16 ticks. The laggards are the euro. FX trading at 116.11, down 0.19%, and the euro stocks and the DAX are down this morning. So that's how things are shaping up right now. The S&P is up half a point, trading at 25.83 and a quarter. The S&P made a double top with last Thursday, I believe. Yeah, I believe it was Thursday. No, last Wednesday. So it made a double top with last Wednesday, the all-time high at 25.8550, leaving the double measured move target of 25.87 still open. And the S&P had a double distribution on Friday. We'll go over that in details here in a minute. And that's where we are. Given that it's a Monday, we're going to look at the week ahead. Today, there's nothing really remaining other than a whole bunch of speakers. So at 9 o'clock we have ECB Speaker Costa. At 12:10 we have Fed Speaker Dudley. At 1 o'clock we have ECB Speaker Mersch. There have been several speakers already this morning. Prate and Visco have already spoken. And then looking at the week ahead, remember the Fed came out last week. Tomorrow we have a bunch of ECB speakers again. Fed's Yellen speaks. We get German industrial production and PMI, and then the Euro retail sales, and the U.S. we have consumer credit. Wednesday has no economic data at all. Wednesday very, very quiet. Thursday, ECB speakers, German current account, UK trade balance, industrial production, manufacturing production, and then U.S. jobless claims on wholesale inventories. Wednesday, of course, we'll have the crude oil inventories. It's not considered an economic number. Friday, we have ECB's Mersch, and in the U.S., we have University of Michigan and monthly budget. So throughout the week, we have some mostly second-tier numbers dominating the calendar for the week. So that's how things are shaping up, okay? I'm not going to go over the last Trader Bite, which was done on Wednesday morning before I left to Vegas on Thursday morning, and the market has basically uh, pushed the all-time high on Wednesday on a gap up, responded, came all the way down to balance to the MC point of control, and held on Thursday. Here's what I'm looking at. Be nice to me to share the screen, right? So this is what we've got. So Wednesday, we open right there. We test higher. We become responsive. We come back, test the prior day's high for a nice rotation up, and then we break through and push into the MC point of control, which is black line that you see here at 25.7250. We pushed to 71.50 for a nice rotation up from 71.50 to 78.50. 7 points on the bounce. Where does it bounce to? It bounces right to the mid and then closes on top of the point of control. This shows clear rejection of higher prices on Wednesday. And then Thursday, we open up and just drop down very quickly. A 13.75 point rotation down. We push right into the value low of the MC. We push against several key levels. Remember I talked about this 61.50 area being really key, or 61.75 area being really key test area, and we basically stopped 2 ticks ahead of that, and then we held and pushed higher. We had a neutral day on Thursday. Friday, we opened right on the edge of the high of Thursday, test lower. We could not get to the MC point of control again, and then we trended up and held the point of control at the extreme double distribution trend day. And the expectation, of course, was for the reopen on Sunday to push us higher into 25.87, which did not happen. We actually sold off on the open yesterday. So that's how things shape up right now. As far as what the overnight session shows, here's the overnight. You can see the sell-off. So we gapped down on the news coming out of Saudi and so on. There was a missile strike as well, a missile that was shot down by the Saudis. Some rhetoric about Iran firing a missile at Saudi Arabia, and it's an act of war. So that's all going to have a very bullish influence on crude going forward, in my opinion. So we open in a gap, we become responsive immediately, we push right up, and then we sell off, and we've been trending up since the Asian session opened. We've been trending up, and we still didn't take out that 25.8550, which is expected this morning. So I'm expecting it to drift up and take that high out. So that's where we are. Again, the key areas, key zones, still 25.7250. We still have the open gap and naked point of control at 61 and 61.75. This is another key area. Okay, and then above us we have the 25.87, and that's how we're situated right now. There's a new measured move that's developed over the last few days, last week and a half or so, and I'll add that to the flex levels a little bit later today, which gives us a target somewhere near 2600. But right now, this is where things stand, and as we head into today's session. To look at what we accomplished, let me find it. All right. I lost my weekly composite. Let me pull that up. To look at what we've accomplished over the last several weeks, here's what we've got. 2 weeks ago, we dropped below, talked about this a fair amount, we drop below the low of the week of the 16th of October to end the one-time framing up with this new low, and then we end up pushing all the way through, closing the gap and closing near highs, and then we resumed last week. We basically resumed the one-time framing up we were on for quite some time. We have a week high on the weekly. You can see there's a triple TPO there at the high. TPO stands for time price opportunity. It's a classic market profile term. It's actually a double. This leaves us with a weak high, as you already know, at 25.8550. This is a high probability. There's a very high probability that this will likely get taken out today or over the next couple of days on our way to 87, which isn't far. But overall, you look at what we've accomplished last week, and you'll see that overall the market just continues to reject prices down below. So right there at the 66.50, 67, all prices were rejected. The week before that, we rejected all prices below 46. Okay, and so the market tests lower, and you have the buy the dip buyers coming right in and bringing it right back up, and that's how things have been for quite some time. So that's the weekly. Looking at today, the key expectation right now, we're trading at 25.83 and a quarter. We're right up against the value of the point of control of Friday. The expectations for an open auction, we are inside of the high volume node from Friday, so that's why we have an open auction. Looking for a weak test lower, impulse up into the point of control, and then a push through the 25.8550 into 87. I expect it to go through 87 and consolidate for a push into 25.92, and then reversion to 87 at the end of the day. So I'm looking for 92 today for the high. I'm looking for 83 on the low side. So as the market, how am I going to trade this? As the market pushes lower, I'm going to be looking at my book map, order flow, and heat map to see what areas I can lean against to get along on into the point of control, which is only a point away or so. But the key target is to scale out. My goal is to scale out ahead of 25.8550. Again, these are not trade recommendations. Trade your plan. This is simply I'm sharing with you what I'm doing. The goal is to scale out ahead of 25.8550 in case a triple top forms for a period of time. So scale out at 25.85 and then wait for the second impulse. Through there, I expect it to run some stops. I expect some collisions to occur up there, and then work 25.8650 ahead of 25.87. Let it run through, and then look to lighten up before 25.90 and especially before 25.92, expecting about 9 points of range on scenario number one. Scenario number one. Okay, second scenario, we take care of all of that right off the open. We have an open rejection reverse, push into the point of control, Friday's point of control, push into 87, push through, consolidate, get really tight. So what you end up with is a P-shaped profile, and then later on continue higher into the 90-91 area to finish down. Again, we're looking for 92 at the top. That's scenario number two. Ooh, that is a horrible circle there. But that's what the profile is expected to look like before it extends up in the afternoon. So both of those are up hypotheses. There's just no indication that I should be looking to the short side. Hypo 3, however, is responsive up, tests at 25.85, does not find buyers, and then forms a lower high, gets through the opening swing. Now we look for shorts. Now I'm looking for shorts, and the target for shorts is down into this 25 25.80 is the key target, the LVN, the IB, the mid of Friday. So 25.80, okay, for the bounce, test, consolidate, and then come back up and finish at the point of control of Friday. That's scenario number 3. Okay. I'd like to cover the Russell. I run out of time. I need to find a way to abridge this process so we can go over the Russell as well on a consistent basis. But those are my plans for the day. I hope you traded well Thursday, Friday while I was not here, and I hope it was fruitful to you. For those of you who did not hear the Trader Bite on Wednesday, I talked about failure and how important failure is to you as a trader, to experience failure, and for you as a human being. Just go to Thursday's or Wednesday's Trader Bite and push the time scale to about 14 minutes in. I start to cover it at that point. Good luck, and I'll catch you tomorrow morning. Take care.